So, what 7 investments do the wealthy avoid? Number 6. The wealthy avoid penny stocks. Penny stocks are any stocks that trade for less than $5 per share. They're not commonly looked at as a good investment, and the wealthy and investors avoid them for a few reasons. Firstly, penny stocks don't have to register with the Securities and Exchange Commission, so they don't have to give them their annual reports. It's important to note that there is no expert checking the validity of these company disclosures. This makes them very volatile investments. Another reason why penny stocks are risky investments is because they have low liquidity. Since not many people invest in these types of shares, it can be difficult to sell the stock when you want to. One of the downsides of investing in penny stocks is that their price fluctuates a lot since their trading volume is lower than popular stocks. Investing in volatile markets is never an easy task and can be very stressful during periods of high-low market value. Providing a way to measure the value of your investment holdings at any given time helps you maintain your composure and stay measured. So, keep your investments to assets you can research, and if you want to go with your money into something blindly, there's always Las Vegas. In the next video, I talk about a certain currency that the wealthy avoid, that the average person sadly often believes is a great investment. You don't want to miss that. So keep accelerating your financial journey and watch this video. I'll see you over there.